How should you put $50,000 worth of your money to work? Should you put your money in crypto? Should you gamble? Should you save and gain interest? I'm going to share with you two approaches, and I'm going to let you know which of these two approaches I did and why. So 7 years ago, when my daughter Kinsley was born, I came down and I decided, how am I going to pay for her college? I had to take a conservative approach, and at the time I wasn't a big fan of the stock market. I knew real estate and I understood that the power of real estate, not only for generating passive income, but also too being a great hedge against inflation. So what I did is I took $50,000 out of my retirement account and I put it down on a property in Texas. The reason why I chose Texas is because Texas is a very, very stable market. It's very landlord friendly, not tenant friendly, which is a very important factor. And I bought an investment property. So approach one is the conservative approach. This is where you find a property in Texas like I did, put 20% down, buy an investment property, put a tenant into that property that pays your entire mortgage, taxes, insurance, and everything. So then what happens is, in 20 years from now, because the great thing about Texas is the rents are going to exceed the mortgage by quite a big amount, so you're going to pay off that property a lot sooner. So 20 years from now, when my daughter would be 20 years old, since I bought it at her birth, she's going to have a free and clear property that at the time was only $200,000 at purchase, and 20 years from now, using just standard appreciation rates of about 5% a year, she's going to end up with a property that is worth $500,000. Now, when she graduates from college and she has some student loans, if that's the route she's gonna take, I don't have to worry about how she's gonna pay them, because guess what? My $50,000 investment has yielded her a free and clear property worth $500,000. She can then sell that property, pay off her student loans, and start a business with it, or she can simply keep that property, rent it out for cash flow, or sell it and buy a primary home. Now that's gonna be up to her. It's a much better way than leaving your kids a trust fund, teaches them the value of money, and that's the conservative approach. Now the high risk approach is something many of you guys don't understand. And the reason why I call it high risk, it doesn't mean it's necessarily gambling or throwing your money away. All that it means is the risk associated with this investment needs to be taken into consideration that you could potentially lose everything. Now, for this high risk approach, I recommend crypto. Why I recommend crypto is because Bitcoin specifically has been the best performing asset of our entire generation, averaging annual returns of over 200%. However, at the beginning of last year, Bitcoin, compared to where it is now, went up 1,500% in value. However, in just short 45 days, it lost nearly 60% of its value. So with great volatility does come great rewards, but also big risks. So with crypto being the asset class that I think is $30 trillion worth of wealth is transferred from my parents and my grandparents' generation into my generation, as I believe going to be the asset of choice. It's easy, it's sexy, and it's completely changing in the world in which we game, in which we invest, and in which we transact with one another. So if I was going to look to take $50,000 and put it into crypto right now, how would I go ahead and break it down? Well, first, I put 50% of that into Bitcoin, because it's very important to understand that all assets follow after Bitcoin. If Bitcoin is shooting through the absolute moon, guess what? The other minor caps are gonna follow it. No single cryptocurrency in the top 10 is gonna be rallying in the face of Bitcoin plummeting. So it's very important to understand that this is a true store of value and wealth. So I'm gonna take 50% or $25,000 and put it into Bitcoin. Then I'm gonna split the difference of the other $25,000 I have left and put $12,500 into Ethereum. Ethereum is the internet of the future. It's the way in which we're gonna act on smart contracts, and it's been the choice of institutions over the last quarter on how they're investing their money. Then the remaining $12,500 I have left, I'm gonna go ahead and divide that up into 10 separate cryptocurrencies at about $1,200 a pop. This will be items like Cardano, Polkadot, Solana, Avalanche, Atom, Dogecoin, maybe even throw a little bit of Shiba Inu in there for you. And then lastly, I'm gonna invest in some gaming cryptos, things like Axie Infinity, Star Atlas, Gala Games, and finally, Network. Now, it is giving me a great exposure to the secure assets of Bitcoin, playing the internet of the future in Ethereum, as well as other smart contracts in the gaming sector. So this type of reward will be massive, but it also could have some The rewards that you're gonna get could be massive, but you need to understand that if you are gonna take the $50,000 and put it into the crypto space, you gotta be okay with knowing that that could be drawn down as much as 80% when we enter into a bear market. And remember, this is a long-term play, not a get-rich-quick scheme. So, what did I do? Which one did I take? Well, guess what? I did both. I chose the conservative approach to pay for my kids' college in the future. Then I took the high-risk approach as a portion of my assets to make sure that I wasn't missing out on the future of money. So, if I've made your wheels turn and you have some questions and you're interested in getting into crypto, don't forget to check out my crypto education platform, Crypto Charge. Check it out in the link below. And if I made your wheels turn on the conservative approach, drop me a DM, as I do have a great deal of experience in helping individuals get into investment properties, Airbnbs, and your primary home. So, if you have any other questions, you know where to reach me.